Welcome back to Dusk Network's AMA session on Thursday, the 11th of August 2022. This time we are joined by our Senior Project Manager Ryan King to discuss the European Union's take on the markets in crypto assets regulation, better known as MiCA regulations. Ryan has been assessing the Dusk positions in the EU for the regulation in his 4-part series article, so more individuals can understand why such a conversation matters in the grand scheme of traditional and decentralized finance. In this AMA session, we will be discussing how the regulations affect governance, regulators, businesses, and investors such as yourself. And of course, we will be answering all burning questions from the community. Without further ado, let's get straight into it.
Just as a layman's individual, for me as an example, what is MiCA in general and why is Dusk Network so encapsulated within this regulatory framework within the EU?
What MiCA, MiCA stands for Markets in Crypto Assets legislation and regulation. And what it is it's the European Union's first effort to come up with a firm legal framework in which crypto assets and people who handle crypto assets can be regulated properly. So what MiCA does is it defines two separate types of things. The first one we call crypto assets, which is what you and I would call, cryptocurrency or crypto. And the second thing called crypto asset service providers or CASP. CASPs are companies who either do exchange services, so any of the exchanges would be a CASP. Any company that offers investment advice on crypto assets, and also sort of anything else in the general sort of crypto area, particularly like custodial services and things like that. These would all be classified as CASP. So after defining what crypto assets are and what CASP are, MiCA then lays out a series of rules for how these two things can be operated. So effectively, if you want to issue a crypto asset, basically a token, once MiCA's come into force, you have three very simple principles that you have to follow. Number one is you have to register a legal entity in the EU, like a proper company in one of the 27 member states. Number two is you have to draft a white paper, which is not like the white papers that we're used to. There's a very clear legal definition of what white papers are and what they must include. Information like the team members that are involved, the investors that are involved, the technology stack, the economics, the rights and obligations of both sides, both the issuers of the token and the buyers of the token. And then you have to take that white paper and you have to submit it to what's called a national competent authority, which is just the entity in the member state that deals with this, and get the paper. I will say the word I use is not rejected. So you don't actually get it stamped and approved, this white paper, but rather you wait a number of days. I think it's 10 days in the draft. And if you don't hear anything, you can assume it's approved. And that seems to be a deliberate thing because they don't want people to walk around and say, we're an EU approved project, right? So the idea is to just get not rejected rather than approved. And then with CASPs, the requirements are a lot more complicated, but the requirements there are involving things much like you would see in any finance company, separating the customer's assets from your own, having a very clear structure of like risk profile, having proper persons, proper authentic persons. So like making sure people don't have, criminal records and things like that in the background, anyone who's involved in the company. Again, we could go on about all the specifics all day, but basically outlines what crypto assets and crypto asset service providers are, and then lays down a series of rules for how they can be regulated within the 27 member states of the EU.
Okay, fantastic. So in the current flux of things, is MiCA actually already in this state of flux? And are there any steps taken by the EU to get MiCA in full effect? And how flexible is Dusk to meet these changing regulations as well?
Yeah, great question. So where it is at the moment is the draft, the sort of impetus for MiCA came, if you remember back to when Facebook announced it was going to launch a coin Libra, back when it was called Libra. It's called DM, I think, and then now it's just nothing, right? But back when they said they were going to launch Libra, that's when they first started discussing this. They've been discussing it for some time. They already released a draft towards the end of last year, the beginning of this year, of what the regulations look like. And then on the 30th of June this year, they sat down and finalized the final agreement for what the final draft is going to look like. This is always a long and complicated process in the EU. So we would expect that the final draft, which should come towards the end of this year, sometime in fall, the beginning of winter, will look very similar to what the agreement was. But again, there could be changes and edits on the way. Once that's done, it'll go through various bodies and the national governments to get approval. And then when all that's done, we would expect to see it come into effect sometime in 2023 or possibly 2024, depending how quick they are. As for Dusk, well, that's sort of what I'm here for, right? Is to keep an eye on this and get very familiar with it. So to make sure that we're fully compliant with this, that we're putting out products which allow our customers and our partners to build compliant products really without even thinking about it, that it's built in at the foundational level. So I think we're pretty well prepared, actually, but we are still probably at least a year away from this coming into enforcement.
Yeah, seeing how the bear market is going in the first place, people do have this form of, what is it that I'm invested myself into, and what kind of regulations are going to be based, and how, if and when they change, how will, the company react to that. But in regards to that, how does MiCA affect the larger crypto market and its investors, and what does it mean for Dusk investors in that scenario?
Yeah, another great question, Fahad. So again, this is where we start to head into the area of speculation. As we're sort of just predicting the future. We can have a look at it from a few different perspectives. The EU obviously has its own reasons for wanting to pass regulation, given how the community in general looks at regulation. I assume, some people may assume not great motives. But certainly it looks as if they want to get a grip and a control over crypto if possible. We can argue whether that is possible, but they'd like to. But at the same time, they don't want to lose out on this kind of talent war and tech war, especially Europe and the US and China right now. So they want to make sure that it's a good jurisdiction where people might be encouraged to come and build blockchain projects and crypto projects. So they don't want to strangle it in the crib. At the same time, they want to try and get it under control. So they're trying to walk that fine balance. The hope is that if this feels regulated, if it feels like there are guarantees, if it feels like it's secure, that more people will be willing to get involved in the market, especially maybe larger organizations who might want to put out experimental products, test out ideas around security tokens, maybe issue their own tokens, because they now got this very firm framework to operate in. Like before, they could run pilots, but it was always a gray area because maybe next year the rules change and they have to shut it down. They've invested all this money. But once these rules are firm, it's very clear like what they can and can't do. And so they can begin experimenting with it. So, of course, that could have a big impact on the market, right? Because Europe is, 450 million people roughly. It's the world's largest GDP if it's counted as a single state. It's a very wealthy market. So with proper regulations in place and people starting to experiment with products and launch new tokens, launch new security token contracts, it could be a huge boost for the market. The other way to look at it is, would it follow the same path like GDPR? So for those who've seen GDPR, the privacy regulations, the EU is sort of the first major jurisdiction to really come up with proper internet privacy rules. And then a lot of countries around the world have said, you know what, this is pretty good. Like we could imitate this. So one possible thing to think about is whether the same thing might happen with MiCA, with a very large, wealthy, powerful, influential jurisdiction having regulated crypto assets. Other markets around the world, ones which are dependent on Europe, so maybe more like Latin America, parts of Africa, might look and think we could copy this regulation. So that will also have an impact as well. And again, that could go good or bad depending how you see the impact of the regulation.
All right, that is very interesting take actually. So this next one is actually a community question, and it kind of comes to me as well to some extent. Is that
Cool.
if, for example, the person resides outside of the EU or has perhaps a dual citizenship, how will this impact them?
Yeah. So a lot of this will come down to, I suppose, what is it that you're doing outside of the EU, right? So if you're in the business of launching these kind of things, like if you're trying to launch a token and you would like to sell to European buyers, or do any kind of operations in Europe, then you would need to get the appropriate licenses when MiCA comes in. And if you don't do that, you can end up on something which we only heard about on the very final draft on the 30th of June, which is the upcoming blacklist. Which is a pretty terrifying sounding thing. So it sounds like what's going to happen is if anyone tries to sell newly issued tokens to European citizens and they're not MiCA licensed, they'll end up on this blacklist. And the suggestion from the discussion was that they might go as far as perhaps blocking websites, even maybe taking legal action in international commercial courts against some of these token issuers outside. So they want to make it as difficult as possible for someone to sit just outside of the EU and try and sell to European citizens. So if you're thinking of doing that, then obviously this is a very, very large impact. If you're sort of regular trader, a hodler, something like that, again, I suppose the impact in that sense is going to be somewhat minimal. You are now looking for those secondary influences, which is what we just talked about before. If you see this as a surge to the crypto market in general, people going, phew, I can relax, moms and pops and people getting involved in the market, then you will see potentially the value of your coins going up as well, right? As more of them enter into trade. Whereas if you go the opposite effect and people get worried and kind of decide to not launch projects because they find the regulations too tight and the market constricts, then obviously the value of what you hold is going to go down. So it really depends again on how you interpret the presence of regulations. That's the interesting part. This could either be the beginning of a huge boom when people feel like, oh, this gives me the same guarantee as I expect from, I don't know, Visa, Master, or a regular bank account, right? And then there's a surge of money in, or the opposite. People get scared off and go, you know what, these regulations are just too tight, they're too constricting. I don't want to work under these conditions. So that would be the impact, I think, for sort of regular folks who are trading, who are holding.
Understandably, and of course, this year has been quite a controversial one, of course, for many aspects in the crypto sphere. And one of them would be if you could tell me and the audience of why perhaps stablecoins have pushed the mandate to accelerate MiCA by 2024, and why are they causing such a mass disruption within governments where new regulations have sprung into place within the EU?
Yeah, great. That is the main, as you well picked up on there. It's not coincidental that they started talking about this draft regulation in the wake of Facebook Libra. Stablecoins, to be fair, still now are a fairly small share of the crypto market, I think, as we all know, but it's growing. And this is definitely the thing that the EU and governments around the world are probably maybe more worried about than things like Bitcoin or ETH right now. And the reason is mostly because most of the things that they're concerned about limit the ability of the government to control things like the money supply. So to throw it through, I suppose, let's say 3 different things we can throw right out. If you're the government, so imagine you're sitting in the government's shoes here. So when you put money onto something like, say, a public transportation card, or you buy Disney dollars, these things are like representations of money, right? So when you throw a euro onto a transportation card for some metro system somewhere in Europe, you're basically getting an IOU that says, we're going to give you a ride which is worth €1 at some point in the future. €1 goes into the system, and then the train company has your euro that they can then take out of the system. €1 in, €1 out. But hypothetically speaking, with a stablecoin, you give me your €1, I give you a €1 stablecoin, but I still have your euro. So you have a euro you can spend, I have a euro that I can spend, but only €1 went in. So 1 went in and 2 went out. So this is obviously something that governments would like to avoid because it's inflationary, right? Again, it seems like a very silly example, but in the cases I gave, like transportation systems or Disney dollars or whatever, those things are representations of money, and they purchase very specific services within a limited set of within a limited environment. Whereas in theory, were stable coins to be accepted as like proper payment, so to speak, then that's a very different situation. You can't really limit that. So you've got this 1 in, 2 out kind of thing. So they're worried about that. They're also worried about the possibility of stablecoins eventually, stablecoin issuers offering interest on stablecoins, because again, if you're a stablecoin issuer, one of the things that's very tempting, of course, is to take that, even if you just do a 1-for-1, is to not use that capital, but to rather invest it into something, and that's how you could potentially make money from running a stablecoin. in order to then encourage people to come in and purchase those stablecoins, you would want to offer something, offer them a little bit of the juice that you've got from your investment, which would be similar to how a bank offers interest rates. But again, if you're offering a higher rate than a bank would, then people would obviously naturally look to stablecoins as a better place to park their money than banks. So now you hit these other two reasons. So banks now have less money with which they can use for things like offering to people who want to buy houses or offering to people who want to set up businesses. Banks will always find a way to get their hands on money, but if they don't have it from customers because their money's in stable coins, they'll look to less secure ways to get money. So now we go back to this kind of mortgage-backed security nonsense that we had from 2008. So that's obviously something the government wants to avoid as well. They don't want banks to be encouraged to go and get risky money. And then also as well, when governments are trying to do big macroeconomic actions to fight whatever it is they're trying to do, an economic downturn or whatever, one of the things they do, of course, is either expand or constrict the money supply, which again is much harder to do if a very large amount of the circulating money is in stablecoins, which are issued by private companies they have no control over. So for those three reasons, they can look at that: inflationary measures, less money in the pockets, less money in the vaults of banks, and the lowering of their ability to issue new coin, as effectively all that just adds up to threatening their ability to control the economy. And so that's, if again, the point here is I'm not being a lawyer like defending them or anything. I don't take a position really, but if you're in their shoes, that's not a good thing. So they would like to get this under control.
Really appreciate your knowledge over the banking sector, actually. I mean, I got to learn a lot about this within your articles. Although, of course, the Disney dollars analogy actually gave me a chuckle while you were actually speaking about it. And of course, talked about interest as well. But we also came down to a question in regards to taxation. So the question from the community was, does MiCA speak about taxation of crypto-related gains at all?
It's a great question, and that one is a really easy one to answer. No, it does not. There's nothing in MiCA about taxation of crypto gains. There may be in future drafts, but right now there's not.
Right, perfect. And are there technical requirements stated in MiCA, such as privacy or instant settlement finality, in order to comply with these regulations?
Yeah, so speaking on behalf of Dusk, I would love to say that those are the two things that they've written in, but actually they haven't. So we can look at this from how they're looking at it. And I think if you look at the wording of the document, the way they write it, the requirement, I get the feeling, and again, I'm maybe putting words in the mouths of EU commissioners, but I certainly get the feeling from reading it like obviously this legislation is aimed at controlling the crypto industry to some extent, but I get the distinct feeling like they don't really think of it as like a real thing, if that makes sense, like real in quotation marks, because whenever they're laying down rules, they're very rarely on the technology. They're much more on like the what you might call the real world side, right? So business registration, like real assets that get put in a real bank vault. That's where the very strict regulations are. On the technical side, they're kind of like, it works however it works. So the things they're very strict about, for example, is if you're launching a stable coin, if you're doing a 100 million euro stablecoin, you should have 100 million euros in a bank vault somewhere that's not being touched. And they audit every 6 months. They're very, very strict about that. But like for the tech stack, no. And that was the privacy one, particularly, was a surprise for me because I thought, especially with the relative success of GDPR, they might find a way to link those two together. But so far, no. And that was actually, I wrote in one of my articles. Oh, sorry, no, I lie. I wrote in an article which will come out next week. Sorry, sneak preview. That's one of the things that I was quite surprised wasn't in the final draft, was any privacy requirements.
Right, perfect. I mean, that pretty much kind of answers that question for me personally. But I'm going to kind of head off into a more general question in regards to TradFi and DeFi. So, why do TradFi conglomerates bother getting into blockchain? And the same goes for DeFi players trying to get into the traditional finance. Is there like any benefits there?
Yeah, I'd say so. I mean, from a TradFi perspective, again, I mean, we're always trying to put words into the mouths of people that we're not. But with the TradFi industry, I mean, there are obvious advantages to be made in terms of speed and accessibility. I mean, if you can tokenize securities, for example, there's no reason why you can't trade 24 hours a day, which, I mean, if you're a financial institution, a bank or whatever, I mean, that's a huge advantage, right? That's so much more money that you can make. That's fantastic. And especially like you think about something like clearing and settlement, which currently for like this is how we sort of settle up the money to the person who's bought the equity, like complicated process. Takes maybe around 2 days at the moment, right? So that's part of the reason why you have to have trading hours to some extent, because they have to have time to catch up their records. But again, if it's all tokenized, if it's all digitized, you can be doing that 24 hours a day. So it's a much faster market. It's much more, and then it's also much more accessible, not just in terms of time, but if you can include, for example, if you can whitelist regulations for who can and who can't buy securities into your product, you can theoretically open it up to a wide range of people. Imagine somebody now who's thinking of getting into the game. They want to buy some securities, some bonds, some equities, or whatever. They have to go down and they have to fill out all this paperwork and send pictures of, passports and this kind of thing. And it's a long process to prove that you're able to actually buy that product. But you could automate that whole process in, and that's incredible because I could go and click to purchase something, and basically because it's all built in at the foundational level, the fact that I can buy it is already evidence that I'm able to buy it, if that makes it sense, because I wouldn't be able to buy it if I wasn't eligible to buy it. And I said very not explaining it very well. But so again, that just if you're looking at it from a perspective of financial institutions, that's a huge opportunity because it's so much easier to get new people involved. And again, that's more money, that's more trading, that's great. Looking at it on the other side, if you're a DeFi investor, I guess you're looking at it from a very different perspective. I mean, why not diversify your portfolio? Right now, you have something, you want to invest something, you want to do a bit more trading. Okay, it's more DeFi. What if you want to have something that has a much more sort of stable price over time, or a much slower growth, or a longer yield? Right now, that's sort of inaccessible to you. If we could link those two markets together, that would be great, right? Or especially, people listening here are people involved who've made some good moves in the market, and they're ready to maybe diversify a little bit. Right now, that's tough. You have to exit your position in the DeFi market and then take it to whatever, some part of a traditional system, and get involved that way. And so again, both sides have quite a lot to gain from this.
Yeah, I mean, of course, just looking at traditional markets in general, I would have never actually thought, they would get into the DeFi space because they've always been so reluctant to get into that side. But, kind of glad that this crossover is happening now. I guess there is some value to be found there. So moving on to another general question. So I remember the first article that you posted had a lot of key terms. And this was, of course, in relation to MiCA. So how does
Yeah.
one educate the general public about all these terms? Isn't it a bit too much? And going through the crypto asset classification by MiCA, where do we actually place Dusk?
Yeah. Yeah. Well, yeah, no, that's, I think, yeah, that's why I did a whole article just on terminology. That was like article 0, because we had to just establish this basis. This is unfortunately, well, I would say it's probably generally a government habit, but it's certainly an EU habit is for everything to have a name, everything to have an abbreviation, a nice abbreviation. And that's like such an important part of building legislation in the first place, which probably seems quite comical to us outside of it, but it is part of it. The interesting thing with the cryptocurrency classification, as mentioned in the article, was that what they do firstly is they define what a crypto asset is. So it's a DLT based token that's used primarily or largely as a form of payment. Okay, cool. So now we've taken from all the possible things that could be crypto assets, and we very clearly define, okay, these are crypto assets. But then they lay down very specific definitions for 3 things: e-money tokens, asset reference tokens, and utility tokens. And they lay out exactly what they are. We can go into them in a little bit. But the odd thing is that there are things which very clearly fall under that first definition of a crypto asset, but then do not fall under any of the 3 subsequent sub definitions. So they're kind of left. That's why I said there was what I call an implied or an inferred 4th category, of which we don't have a name. And particularly important would be things like Bitcoin and ETH, because they do not fall in any of the three subcategories, but they clearly fall within the definition of crypto assets in general. That's why we just use the phrase cryptocurrency. We're just taking sort of the industry standard phrase for that fourth category, but it's probably not a great one because, well, we already know cryptocurrency has a different meaning to most of us. To go through a bit more of a terminology, that asset reference token is somewhat similar to what people would normally call an asset backed token, but they decided to go with that particular word for whatever reason. E-money tokens and asset reference tokens are two different types of stable coins, but they only ever use the word stablecoin in the legislation in like quotation marks, because they don't have a legal definition for what stablecoins means. They have only a legal definition for the two separate types of stablecoins. So yeah, it's a lot. Like, I think even just listening to me explain it, it must be quite overwhelming. Where does Dusk fit in? Again, we're sort of waiting to see a little bit how these final definitions fall. Dusk, of course, doesn't fall under the category of an ART or an EMT because it's not a stable coin. So it will put it probably closest to a utility token, which is defined as purchasing services that are provided by the same people who provided the coin itself. So I suppose that's probably the closest definition we have right now. But there are some other arguments that it may fall in that implied fourth category as well, especially if Dusk in the future becomes more sort of accepted in a more payment sense, then it would probably bleed over into that fourth category. So you can see, even with the hundreds of thousands of words on paper, it's not easy for me to even define our own company's token as where it falls within the category. So there's still a lot of work to do.
I mean, absolutely, that makes a lot of sense to me in this regard as well. I did actually have a question about the crypto asset service providers, but since you already mentioned EMTs and ARTs, can you in layman's distinguish between, the EMTs and ARTs, and why should anyone care about these in regards to the overall scope?
Yeah, sure. So EMTs and ARTs collectively is what we would. So let's break it down from the top to the bottom. So I think all of us. Oh yeah, I'm looking around. I see a lot of familiar faces. We're all people who've been in the industry for a while. So what we would normally call a stable coin, just to recap, cryptocurrency that maintains a stable value, usually against a fiat currency or whatever. Within stable coins, everything except algorithmic stable coins are covered under MiCA. Algorithmic stable coins are not maybe really covered. We're still sort of working on whether they are covered or not. So then you take it, all the stable coins that you know, and you basically say, right, if its value is backed by real assets of a single fiat currency, then the EU calls that an electronic money token. So again, if you have 100 million euros of your stablecoin and you back that by 100 million like fiat euros in a bank account, then it's an electronic money token. If it's backed by literally anything else, it's an asset reference token. So what does anything else mean? It means more than one fiat currency. So if your assets are a mix of euros and dollars, that would be an asset reference token. It could be one or more cryptocurrencies. It could be one or more assets, gold, diamonds, property, a rate, something like that. So effectively, yeah, if your assets that back the stablecoin are one single fiat currency, it's an electronic money token. If it's any other combination of any assets, then it's an asset reference token.
All right, perfect. Yeah, I mean, it gave me a bit of a, breakdown as well. Remember, there was something called ABTs as well before, correct? And I guess that doesn't show up in MiCA regulations anymore. Is that correct?
Yeah, so ABT is an industry term, right? Asset backed token. But the problem with that is that, again, so all you're saying there is it's a token that's backed by assets, right? So those assets could be a single fiat currency, or they could be many different currencies or assets. And so the EU is very keen to separate those two things. So an ABT, I think everything that's described as an EMT or an ART in MiCA could be classified as an ABT in industry standard, which is why they don't use the term, because they really want to divide that into two categories and have different rules for them.
Okay. So going back to that CASP question, so I would say that something like an exchange would be called a crypto asset service provider. Am I correct in this?
Correct. Yeah.
Okay, so how does MiCA impact these larger exchanges, as an example, that have jurisdiction within the EU?
Yeah. So, yeah, if you're operating an exchange within the EU post MiCA, you will have to go out and get a CASP license in order to operate. Um, in a slightly confusing turn of events, there's a different set of legislation outside of MiCA which requires you to get a license if you do fiat to crypto exchange, which is not going to be repealed until about 18 months after MiCA comes into effect. So, somewhat annoyingly, you're going to have two different licenses if you run an exchange which deals in fiat, which is exactly the sort of nonsense that this legislation was supposed to avoid. But again, as I say, there's always wrinkles to iron out. So yeah, how would it affect an exchange? Yeah, so you'll need the license in order to operate. Getting that license requires showing a lot of stuff. So being extremely transparent about who's involved, who the directors are, that they're as I said, proper persons. So don't have criminal records and things like that. You have to make very, very careful to separate the funds that you're managing as part of the exchange versus the funds which actually power your operation. So like your money versus the customer's money, those have to be very clearly segregated, and you will be audited frequently. So yeah, it's quite a lot of licensing. Basically, I would say it's bringing a crypto exchange up to the same kind of standards that you would normally apply to a fund manager or something, if dealing with like just fiat based assets.
All right. So we're kind of coming close to the end of our session. So I have one more question for you. So anything we have missed in regards to MiCA that you would like to inform the guests or the audience?
Yeah, there's a lot of different things to mention. It sounds kind of onerous. I think some of these rules they sound like they would put a lot of pressure on anybody trying to issue a token. Um, I think one of the things to remember though is that the white paper. This was pointed out to me by a good friend of mine. The white paper is about 10 pages long. When you think about that, that's not actually a lot to launch a potentially multi-$100 million stablecoin. Um, when you do an IPO, the prospectus that you have to write legally is about 100 pages, 10 times as long. And so, still compared to bonds and funds and whatnot, this is still, nowhere near as heavily regulated, I would argue. So, it's maybe not as scary as it can sound. But I think the other thing I would want to mention is that there's still a lot of things we need to keep an eye out for. There is no real coverage of NFTs, for example, in MiCA, except unless they're used as like an asset. There's nothing to do with sustainability. We expected there would be some sort of proof of work consensus regulations came in, but that didn't happen. Although it might. There was nothing to do with privacy. There's a lot of holes in it, and so it's going to be very much a work in progress. I think that's what I want to say. We have a very good idea what it's going to be now, but it's going to evolve and change over the next 5, 10 years into something a little bit more solid. And then when it does, we'll have a better idea. But right now, it's unfortunately, um, it's a good thing and it's a bad thing. I think if you want to launch a token, if you want to become a crypto asset service provider, it's fairly clear what your obligations and rules are going to be. And so, for the purpose of stimulating people to get involved in launching projects, I'm optimistic it might actually work because I think it's a very, especially we said before, TradFi is a very risk averse industry. So this might give them the comfort that they need, the cushion that they need to actually sort of come and join us, right?
Yeah, absolutely. I mean, just going through this week alone, going through some of the things that are happening outside of the, MiCA regulations and framework, outside into, let's say, the States, it's kind of scary with what the SEC terms, different things that we can use or not. But at the same time, at least, in the EU, they have this specific framework that they're trying to build upon. But yeah, I learned a lot from you today, actually, and of course, reading through your articles. also helps me understand more about MiCA and what's it trying to do in the EU, and Dusk's position in here as well. So that marks the end of our discussion in AMA with Ryan. So thank you so much for being here today, Ryan, for being part of this AMA session and gracing us with yourself to our humble community of Dusk enthusiasts. It was a pleasure to hear from your outlook and your perspective on markets and crypto assets, MiCA regulations. It was indeed thought-provoking and insightful, and we look forward to seeing you on the AMA again, albeit on a different topic. For now, to our community, thank you so much for being here today, and this includes our team members as well. I appreciate all of you for giving us your time for the topic today. We will hopefully see you in the next 3 weeks for the next one. Again, this is being recorded, so you will be able to hear this within your convenience after the links are provided. Take care and have a good morning or evening, wherever you are tuned in from. Take care, thank you, and salutations. And again, thank you so much, Ryan.
Thank you. Thanks for having me. And thanks everybody for joining us. Really appreciate it today. Thanks a lot.
Take care, guys.